See you.
How long's it been? Maybe like a decade?
Way, way, way too long. I mean, I remember the absolute last time we definitely hung out was at the Facebook Timelines party in New York. Like that was literally probably 12 plus years ago.
Probably 12 years ago. Anyway,
But
thanks for having me. Pleasure to be here.
thanks for joining. So look, I mean, Squarespace has got to be one of like the most iconic versions of this pattern, right? And again, you can correct me if I got this wrong, but you started the business, in your dorm room with 30,000 bucks, right? Didn't raise money for years and years and years and years and years when the time you clearly could have, right?
Yeah.
And and then from there you've crushed it and you're a large, successful public company now. I
Yeah.
got I got the notice just the other day that my Google domains are switching over to you guys. So
Happy to be
I
a
mean,
host.
so yeah, I mean, I think probably most people are familiar with the product, but I bet fewer people know kind of the early story of like how you got on this trajectory and what you were building. So if you don't mind sharing, I'd love to kind of start there.
Yeah, I think most people know what Squarespace is. So I'll just say a few words about kind of the early days of why it was started, and then, kind of move on to the topic of this talk, which is really the capital structure moving forward and the pros and cons of it. So
Yeah.
I started it in 2003. My background's design and engineering. Started programming it from my dorm room. Launched in 2004. In 2003, when I was programming it, I was either in my dorm room. And I didn't have the $30,000. I had to fight for my parents to give me that because I needed, servers and a logo, and I could like do the rest myself. And then you got into a big fight about why I needed two servers instead of one because I needed redundancy. And like literally, this was a fight. Thank God I got two because one failed in 6 months, and it wouldn't have been a great start to Squarespace. But yeah, got the 30 grand. Launched it in 2004, just me. So I would do everything from the programming, the interface, the copy, the marketing, Google AdWords, and really just started running with Google AdWords and doing the optimization and starting with, 300 bucks. And, some people joined and you asked them why they joined, and some people left and you asked them why they left, right? I think people also, they're surprised to hear, like, I asked them why they joined. I didn't just take it for granted. And those are interesting as well. And then, basically kept running it off AdWords for a while, growing it from 500 bucks a month to 1,000 bucks a month to three, all the way up to $50,000 a month, and just really going as close as I could to break even for about 7 years. 7 years in, and it was basically essentially a one-person company for essentially a one-person company. Yeah, I had some contractors in there for about 3 years of it, so I've kind of done all the jobs. About 7 years in, we did our first outside round from Index and Excel. It was about 38.5 million. Most of that was secondary, so only about 8 million of that was primary capital, just because at some point it's pretty weird to be running the company so close to break even. I mean, you just need some buffer at some point. Even though Squarespace has always been a very predictable business, and we had a huge ability to control our expenses, so that's why we're able to do that. And then the only other money into the business really was a primary round from General Atlantic of 40 million, which if you're ever trying to build an office, you can't do it with no balance sheet. And then a secondary round from General Atlantic, and then one more round before we went public, which was a bigger $300 million primary round. We didn't really need to do that. I mean, we went public via direct listing. We thought it would kind of bring some other people onto the cap table, considering we weren't doing a traditional IPO. But so that's it. I mean, Squarespace is basically, we're 20 years old, and 48 million basically in primary capital into the company up till right before going public. So, you're all familiar with what Squarespace is. I think, started in 2003, four is frankly a blogging platform that
Yep.
noticed that simple blogging, simple publishing meant that people could make websites easily. And so over the years, we've now grown up into a suite of tools for entrepreneurs across a number of different brands. Obviously, the Squarespace brand, but we also in brands like Talk and Acuity. We've launched ones like Biosites. We bought ones like Unfold. We now will have Squarespace domains with the Google Domains asset purchase. And so, yeah, it's evolved from just a blogging platform to a simple publishing platform to a suite of tools for entrepreneurs and helping people look good online.
It's an amazing story. So look, just taking you back. I mean, I'm trying to, when we kind of first knew each other in New York and we were both much younger,
Yeah.
I'd say there are two things that kind of struck me. One is I want to ask about like I remember like when Tumblr launched, not the same
Yeah.
product to be clear, right? But like also in the New York ecosystem, and like they're getting tons of buzz, and like you have like a bigger profitable company that in some ways I would argue, and you can say I'm wrong about this, like wasn't as buzzy, right? Did you ever have those moments when like you were like, man, like should I raise a bunch of money? Like am I, you know what I mean? Like, or were you just clearly on your own trajectory the whole time with kind of your approach?
Well, I would never want to raise money simply to be like famous or
Of
something.
course
That,
not,
that,
but I'm
that
saying to
never,
go faster, for
I
instance,
don't
you know
think
what
it
I
could
mean?
have,
Or
I don't
yeah,
think we could have, I'm not sure we could have gone faster. I think we
yeah,
might have spent it incorrectly. Um, I think that one of the things that was unexpected about that secondary round was it really did allow me to attract a certain different kind of executive level attention because I mean obviously having name brand VCs involved and having a board in place where it's not just like the Anthony's 27 show, like go bet your career,
yeah.
ended up being worth more than I thought. But I mean, New York tech back then is so funny, right? I mean, it was like Tumblr and Foursquare and like Meetup and all these like funny things from that era. And we were definitely always very much under the radar. And Etsy, we were very
Yep.
much under the radar compared to those very buzzy startups. I mean, selfishly, I like that people don't confuse it with Foursquare anymore. Now we just get confused with Square. So fine, one, some of us keep going. But the yeah, that was a funny time.
Fair enough. And then like the other thing I just remember because I had a venture back startup in that era, in that buzzy world that
Drop
kind of
IO,
worked, kind of didn't. Dropio, right? It was like a file
I
sharing thing.
remember.
Kind of worked, kind of didn't. Ended up selling it well, it was fine. But but I kind of I do remember even then that like you just always felt very quietly confident in like what you were doing, right? And
Yeah.
like when you think about like from a personality perspective, right? And like who you are and kind of like what drives you. Like, can you kind of take me through like the emotional journey a little bit on like how you were approaching business then and like things like that? Cause I'm curious, like you always kind of were doing your own thing, right? And felt very confident in it.
Yeah, look, I mean, it was always more about Squarespace, the brand. And by the way, we were always doing a lot of advertising. I mean, we did a
Yeah.
ton of out of home advertising in New York, early to
Yeah.
podcast advertising, subway takeovers, all kinds of things. So I was always about the growth of the brand and not like, how many speaking things I did. In fact, PR, yeah, one's listening right now, but like the PR team here never really knows what to do with me. They're like, well, where do you want to show up? And I'm like, I don't know, where should I show up? Like,
Yeah.
what would help Squarespace, right?
Yeah.
And so yeah, just always focused on that. I think it was and you said emotional journey. It's very interesting because I think when you start something in your dorm room and you move to New York and you don't really know anyone and you're kind of running it alone, it was always this, and Squarespace wasn't a well-known brand at first, of course. And you go to people out and they're like, what do you do? And you're like, oh, I just started Squarespace. I'm like, how many people is it? I'm like, one. They're like, oh, you're like unemployed. Okay. And I'm like, all right, well, that's fine. And then people started to know more about it. And I would have, once in a while, people would recognize, I'd be like, oh, that's incredible, that anyone would even know what it is. And then when we got our first office, it was like a cool, how many square feet it was, under 1,000 square feet in Soho, and then a bigger one. And for some reason, that moment in people's mind meant it was real. And I'm like, it was always real, whether or not I have a like brick box to walk into or not.
Yeah.
But that was good. And we always invest in the office. We were a very in-person company, obviously a very creatively led company. I think it's very difficult to do that at any scale without having in-person interactions. And then we kind of went from there. And then, it just kept, there was no, I mean, it's 20 years, right? So there are moments along the way where you're like, whoa, that was a kind of a wild thing. Like, our first Super Bowl ad or something like that, where it's just really a lot of visibility in a way that you didn't have before, or a lot of the Subway stuff. I mean, even before that, or, some of the investment rounds, going public, the Super Bowl ads always stand out. We're about to do our 10th, believe it or not.
Really?
Which is crazy. But yeah,
That's a lot of money you spent on the Super Bowl over the years, eh?
yeah, and people are always like, "Oh, that's so expensive." I'm like, to be honest with you, it's one of the one things I know people saw,
Yeah, fair
and it's
enough.
the only time people actually want to see ads. So,
Yep, fair
cheers.
enough. So talk to me like again, like the other thing that's interesting is again, I think much like the GoodRx team, or like the Zapier team, much like Muckrack, like you guys, I mean, as the guy doing it for many years, kind of solo, like did it all. Like you had the full quiver of skills to kind of not need to rely on capital and then superstructures to get what you needed. But like there must have been, I'm kind of curious, like the times when you're like, I could be spending my time on higher margin things. You know what I mean? I should hire more people versus not early. Like I obviously you got there and then were able to grow a
Got there.
lot. But like, what like I'm kind of curious both like mentality wise and like, how you thought about those years when you were there clicking on the AdWords buttons and you're also a great designer and you're like, I should be designing something or something like that.
I'd say the early mentality, and it's such a weird scenario, is I mean, I would just make sure I was at my complete endpoint before going on a hire before hire. I mean, honestly, one of the things I was weakest at, was hiring early on. I made many mistakes and I didn't have a network. I mean, I grew up in Maryland. I was, just alone in New York. And yeah, that was one of the hardest things. So either out of I didn't want to do it until I really needed to, and also I'm really this is the thing it's just hardest for me. I just waited. And the other weird thing to think about if you're, you know, basically own it all and you have to choose between whether to hire somebody or not and it's just a weird thing to say. I'm like, well, I could just keep the money myself.
Yeah.
Mhm. And
Yeah.
if I don't want to keep it, well, then I'm splitting it with you. And
Yep.
so, like, it better happen out of pain. And I don't regret any of those hires at all. And
Yeah.
I, there are a lot of early people in the company that had equity, and if they stuck around for a while, it worked out very well for them. But
Yep.
I really tried to do it out of just complete pain. And
Yep.
I didn't have any fallbacks. I didn't have any Silicon Valley network or anything. The VC scene in New York was very small at the
Yep.
time. There was
Yep.
no New York tech scene. I mean, I
Yep.
remember a couple of years later, people being like, "Oh, did you pick New York because of the vibrant tech scene?" I'm like, "What vibrant tech scene? There's
Yeah.
none here." I mean, I personally like New York. I think it fits Squarespace's ethos because of the incredible diversity here and the diversity of professions and ideologies and
Yep.
industries and everything. But yeah, it was kind of an interesting time in the world.
So let me ask you this. I've been asking this question to everyone. I'm gonna ask it to you too, which is just like I want to talk about competitors and then team. So competitors, you obviously have a ton of competitors, right?
Very
Like
many.
in like it's an incredibly competitive space you've been in, and yet you kind of were like you followed a very different course like than a lot of these other companies that have gone out and come after you or kind of gone after the
Mhm.
space in different ways. Like I'm kind of curious again from the capital raising journey perspective. I have to imagine you had many, many instances of venture capitalists coming to you and being like, you have a great start. You have all these competitors. Do you want some money? Right. Like, I like,
So
yeah.
some fewer than you would think.
Okay.
And I mean, I don't know if of course, you remember back then, like, I mean, those are like aggressive times in venture capital. Like, I
Yeah.
mean, it wasn't like awesome term sheets that were like super founder friendly or any of that stuff didn't exist.
Yeah.
And I wasn't like running the sign up away for this like crazy scenario that I didn't really think I needed.
Yeah.
I do remember a long time ago when Squarespace launched. I can't remember if it was like within weeks of me putting it live or it was right before I put it live. And again, we were in the blogging world,
Yep.
and Blogger got bought by Google, and
Yep.
then Six Apart got funding for TypePad, and they were
Yep.
movable type. And so
Yep.
I remember that was like really rough because they got like 15 million of funding. They had all the attention. It was a super buzzy company because blogging was a big thing, and I'm just this like kid with a unique take on it, but just rolling along. And, I'm not sure when did TypePad cease to exist? It probably exists in some ghost form, but Six Apart ceased to exist at least a decade ago.
Yep.
Uh, and then there was, of course, the free people. There was
Yep.
WordPress, which of course
Yep.
still exists.
Yep.
Um, and there was a lot of freemium stuff. You had Wix eventually, after they saved themselves by not, sticking to a Flash website builder,
Yep.
and they've really pivoted away from most things related to free at this
Yep.
point.
Yep.
I don't even know if you can find a free plan on their site anymore. But
Yep.
yeah, I mean, that was the competitive dynamic. It was a little bit soul crushing to have somebody raise a ton of money and be in the press all the time and have all the employees. But they just focused on different things. They did different acquisitions.
Yep.
It just didn't go the right way.
Totally.
But again, I think most companies die from indigestion than from competitive dynamics, right?
100%.
So
Yeah.
that's what I'm always most worried about
Yeah.
ourselves, not, if somebody raised $1 billion for something.
Totally. I mean, I couldn't agree more. So let's the second part, which is like team, right? So again, I totally get what you're saying in the early days, right? In terms of like both your ethos and kind of how you brought to it. But I'm kind of curious. I mean, again, as a company that has raised raised so little private capital, right?
Mhm.
Did you have trouble finding people? Was it different people who were attracted to the mission? Like, how did that end up playing out for you?
Yeah, it's a traumatizing time, I'd say. I think, people were there for sort of different reasons. It depending on people's roles in the company. I mean, it was just hard. Like you have to also imagine, like, I never worked at a big company before, really. Like I was a terrible manager. It was awful. And until I had some of those people in place that were there for the right reasons and good managers and all that, was I really able to sort of turn that story around. But that was not an overnight thing. Obviously, we're much more sophisticated about everything right now. And, frankly, the strength of the team, right? The strength of my executive team is like what lets me even do this anymore. Because
Yeah,
if all the stuff hits me and all this craziness is happening, it's not being solved, you know, it's just, it'll fall apart. So, yeah, it's hard. I think there was a different kind of person attracted to it after there were VCs involved versus before. Again, I
yep,
kind of mentioned that that was a bit of an unlock in a sense that, for people who were more career oriented, probably looked horrifying to join this, successful company, but run by a 27-year-old who could do whatever he wants,
yep,
and you don't really know where that thing is going to go eventually.
yep.
So that was an unexpected positive of it. I think having a board was a nice check-in for me. I thought it was another positive thing. I've always had a very, very positive board dynamic, and I'm really
Yeah.
appreciative of all my investors and independents. Obviously, transitioning more independence now. We just finished our 10th earnings call a couple weeks ago. So different times.
Totally. So I guess the question, I mean, this is a theme I think we've heard from several people as well, right? Which is this whole like, look, you didn't take capital for a super long time. You then did. There was some benefits to that, both in terms of like kind of having a board to check in with, but then also in terms of like being able to unlock certain types of talent. I guess the question would be, there's like 2020 hindsight, right? Like obviously things have worked out fabulously. You've crushed it. Sorry about that. That's a spam call. Should be off. Anyway, so you've obviously crushed it, but like I guess like unwinding the story, if you were doing it again or talking to an entrepreneur now, like would you have raised institutional capital earlier in the life cycle? Like how would you have done things differently or no?
So I was a weird case, right? Because, 10 or what is it now, 13 years ago, I was pretty insistent upon a lot of secondary and a bit of
Yeah.
control structures around that time. And that was incredibly unusual.
Yeah.
And whoever was interested in the company at that point, I mean, it was like, an $8 or $10 million run rate company growing it, I forget, but something that didn't suck, that was cash flow break even. It was very attractive. There was no one else in the cap table except for like my parents who had 5%, for the initial 30 grand.
That's a
Um,
good investment by them.
it worked out great. It worked out just great. So good seed investors, great track record. Yeah, crazy. Um, you know,
If only they had known, they should have pushed you to get 3 servers. They could have owned more of the business.
maybe I don't know what that would have done. That would have made me more of a sysadmin. The I don't know. I look back at that and I go, okay, well, obviously what they were concerned of was, so first off, I didn't need any of this money. So I mean, and the thing I could have, emitted more money than a 27-year-old needed if I want. And so
Yeah.
I was like, okay, well, why don't I make this a little bit like life changing for me? Let them in on an opportunity that otherwise they wouldn't have. They're of course freaking out because they're like, as soon as he gets all this money, he's just going to run off and do something. I'm like, then I would just sell it, and I already had the money. So what are you worried about? Like, and that of course worked out extremely well for all those investors at that time. We went on launch Squarespace 6, do a ton of great stuff over the past 13 years.
Yep.
So, that ended up being unique. Now, let's say sizing it, should I have done more or less secondary? That's pretty debatable. I mean, people run their lives very differently. I had a great time, in New York, and I think
I remember you were buying an apartment. It was very cool to be like,
I'm still in it.
are you really?
I'm still in that same thing after 13 years. I renovated it, but it was great. No, but it let me, I think take more risks with the company than I might have otherwise done.
Yeah.
Um, but yeah, I mean, that's just the economics of it.
No,
Like,
but I wonder. I mean, I get
yeah,
that in terms of sizing, and I think that's a
yeah.
personal thing. I understand. I actually just even mean in terms of like doing like putting primary capital in earlier, right? If you know how much would unlock it. I mean, I know you didn't obviously have to because you
It
weren't
would have,
bottlenecked by it, but do you think
it
with
would have,
2020? Yeah,
it would have helped me with that team thing
yeah,
that I was getting wrong. And also they did help me with recruiting, and their stamp on it did help. And they would get on the phone with anyone I went to hire and explain why they have a very positive view of this. So maybe I could have done that earlier. I don't know. I wouldn't have probably clocked that those are the reasons that would have been so helpful, because I sort of had this, well, I don't need anyone kind of mentality.
Yep.
It's of course not true,
Yep.
but it was kind of the baseline, like explain why. And I just
Yep.
did see some of that stuff for a while. So insofar as it would have helped me with certain team dynamics earlier, I think it may have been smarter. Um, but I don't know. It's kind of hard to say you would accept money only for that, especially in this kind of day and age where there's so much information available to people, and it's not that weird to have a bootstrap thing.
Yeah, totally. So when you actually, let's talk about that, which is kind of pivoting to like today. So like you obviously, again, like I think someone pointed out, it's true. Like a lot of the people on this call, like you're the oldest company, right? And in some ways, I would say like one of the purest true like bootstraps. I mean,
Sure.
Greg obviously did a thing a few years later that's very similar, but to a
Mm-hmm.
huge scale. You have like a few 2011, 12 vintage companies talking in 2023 to founders who are like, okay, I'm going to start something. I'm thinking about the right capital structure. I'm thinking about the right company that's going to be authentic to how I want to build, right? One, do you think it's like easier or harder to do kind of the pattern that you're talking about now versus when you did it? And then like how any advice you'd have for those types of founders?
I just hate to give advice sometimes because everyone's so different. I mean,
Sure.
like I was a programmer and designer since I was 13. So
Yeah.
the stuff I could do by myself is different than if I had grown up with a different skill set, and I'm
Sure.
biased to, you know, high margin software, potentially high margin software businesses. I think a lot of what I would say though that's universal is I sort of touched on just like really hiring out of pain. I
Yeah.
think a lot of companies, even at scale, as we've witnessed over the past um, really 2 to 3 years, have learned the consequences of, you can't just go like crazy and just hire forever. I mean, we've witnessed it here at Squarespace where, yeah, unfortunately at times we're like, hey, all execs, do your, how much, what propose headcount to me. And there's two ways to do it. It's either bottoms up, what do we need? Or, tops down, what do we have, and fill the budget. And both have problems. But the worst thing is when they go to the teams and they go, hey, teams, who's understaffed? And they all go, 100% of us. And
Yeah.
then how many people do you need? Everyone needs two.
Yeah.
Okay, that's 400 people. We can't know. And so we started really tamping that down 9 quarters ago and really keeping headcount low. And as a consequence of our kind of upbringing, if you will, we never got into these incredibly bad situations. We've got what's our cash flow margin last quarter? 23% plus free cash flow margin.
Yeah.
And that gives you a lot of flexibility, especially in a public market where, as we've all witnessed, your stock can go down for absolutely no reason. And you can then buy it back if you have
Yeah.
that cash flow. But I'm
Totally.
kind of meandering across a couple topics. What would I say? So I hiring out of pain was a big one. I'm really against this like over raise concept. I never really got that one where people were
Yeah.
like, hey, well, if you could just raise, 3 times as much, why don't you? And I'm like, well, because then I'd be diluted. Like, but you could
Yeah.
have 3 times as much. I'm like, well, I don't need 3 times as much. The
Yeah.
business is already working.
Yeah.
So what am I going to do with that? And by the way, if I need it and the business is cash flow break even, I have debt options available. I have more than enough options available when I actually need it. That should be even more exciting.
Yeah.
So I don't understand the preemptive raise thing. But again, Squarespace is never a business that had, a runway problem. We were never in a burn rate situation.
Yeah,
So
although it is interesting to push you. I understand the runway thing. I think that's part of it. But the interesting thing, I think, which is I think you guys have in droves, is the other mentality we'll get into about this kind of round after round raising is competitive dynamics. Is the Uber Lyft thing. It's like my competitor has this, so I need twice the marketing budget. I'm willing to spend below the line, like to be unprofitable or whatever. And that obviously ends. It's actually interestingly not terrible if you're the venture capitalist, right? Because you're like, well,
right.
I
Well,
sell money.
the Uber Lyft is why I hate to give advice,
A
because
hundred.
that's the case where I think you should have actually gone. And, if you don't stamp these things out across the cities, they will. And so we were just never in that exact kind of dynamic. And frankly, maybe I was just used to being the underdog and the thing, evolving over time, and websites getting old and I'm getting hacked and they move. And then you have this feature and other people don't have this one. And like, I was just sort of used to it. I mean, GoDaddy had Super Bowl ads when we were one person. And I constantly try and remind the team of that when like, oh, we're getting beat by this company. I'm like, how? How are you getting beat? You have everything in the world to not get beat. I'm not used to losing in that scenario.
Yeah.
So like, I don't know. But this is why I'm saying I hate to give advice, because the Uber Lyft thing, I would go on
Yeah,
the
it
other side of
depends on the
that.
market. But I guess the other thing is, Anthony, like, which is interesting, is like, and again, this goes back to the whole like founder problem fit, right? As you talk about like your skill set going in and what
Right.
you'd want to do and what, things like that. I mean, like, my assumption, you can tell me I'm wrong, is like you also wouldn't do that game, right?
I'll play the game in front of me. I mean, I don't know. I mean, I had a different game I was playing, but like, I don't know. Like, I just lived a different life.
Fair enough. Fair enough, man. Cool. Well, look, I appreciate you kind of hanging out and chatting on this stuff. Caroline, is there anything we should ask Anthony closing before we kind of move on?
A quick question one person had is, for early career founders, raising from institutional VCs de-risks their entrepreneurial journey, especially in the case of failure. How else might they de-risk sort of that journey from your perspective?
Got it. So the question is, if they don't raise from VCs, which this person's viewing as a de-risking
Yes.
element, how else would they
I
de-risk?
think that what we're saying is if I raise from Sequoia, I'm a founder who raised from Sequoia. If I'm not going to raise from Sequoia, I just am taking more risk. Probably true.
Probably true. I mean, that's like one of the points of what I was saying with the hiring thing, right? Like, it was sort of unexpected to me at the time, but like that's actually kind of helped me get other attention onto it. How else can you de-risk?
Make money.
Yeah, exactly. That's where I was going to go. Just have a real business. I think people get so caught up in these games and who they raise from and X, Y, and Z. At the end of the day, as somebody who's in the public markets, those games really end. They really, really end. I mean, it is, what is the ultimate free cash flow multiple you're going to see? There's a DCF somewhere in there they better believe in. And so, like, that will happen to you at some point. And then also, look, unless you want to just exit on selling hopes and dreams, which is, by the way, quite enviable to do versus being in public world. Yeah, I would just say, like, I don't know, make sure you know what you want from things. But like, honestly, if you build a great business and you're solo founder and you make a business with 2 million in cash flow and 5 million in top line, you're pretty damn successful, right?
Yeah.
Especially on how you built that. The last thing I'd say, that's goes back to that hiring at a pain thing. There was another way to make Squarespace the same exact product that every consumer sees, and it would be unsuccessful. And that's to spend 3 times as much doing it. So you really have to be very aware of what things cost and the speed you want to move at. And, that was another great thing. And again, it instilled this discipline from us from the beginning where people are like, oh, look at, they ran that Super Bowl ad. They used all that VC's money to do it. I'm like, no, we actually funded that out of cash flows. The VC's money was secondary. So like, it couldn't be more wrong. And that really de-risks it because you can replenish it versus like you're out.
Yeah.
But if you just, anyway, I'm going over.
Well, I'll give you my funny analogy on that, which is I grew up playing. Used to love the game Warcraft 2, right?
Oh, I played Warcraft and StarCraft my whole life.
Yeah, so like as well as I do, like my favorite. I was never very good at the battle part, but I always just build enormous mining communities, right? So you just like replenish your budget super quickly, and it's a lot easier way to play.
Yeah, for sure. Resource
Anyway,
allocation,
there you
micro and
go.
macro.
Anthony, thank you for joining. I really appreciate it. Congrats on everything. It's been too long. I'd love to say hey, get a beer in New York sometime.
Yeah, I'm sure we definitely should. And thank you for having me. And good luck to everybody.
Appreciate it. Talk to you, man.